Kathy Wood thinks Tesla could go to $5,800 a share by 2026. Is she insane? Or is this actually possible? If you follow this channel, you know I'm building a $1 million portfolio publicly, and we always start with that. I show you how my portfolio is doing, what's in it, and if I own the stocks that I'm talking about, or if I'm thinking about buying them. So we could see the portfolio value is $21,120. I have put a total of $22,000 in, so we're down about $873, which is about 6%. And we're building this over a period of 10 years, so we've got plenty of time for that performance to turn around, and I'm confident that it will. Let's jump in to Ark and Kathy Wood's new updated 2026 model for Tesla. Ark's expected value for Tesla in 2026 is $4,600 per share. They have a bull and bear case, which they have tuned to the 75th and 25th percentile of what they think is likely to happen. The bull case of $5,800 a share, and the bear case is $2,900 a share, which is almost a 200% increase from today's prices, which a bear case being 200% higher is kind of crazy. And it shows that at the very least, Ark and Kathy Wood are extremely bullish on Tesla through 2026. They have open sourced this and they've shared it publicly, which a lot of investment firms don't do. There's varying opinions as to why. Are they trying to pump their book? Are they trying to cater and appeal to retail investors to basically pump their book or attract more money into the funds? There's all kinds of allegations like that. I think for the most part, they have good intentions and they are trying to open source and share research more widely. But they're a business and they're trying to attract money. And this is, at the very least, how they communicate with their potential shareholders, which Ark's funds are down, I don't even know what it is at this point, 40 to 60% from their highs. And some of the numbers that I saw last, this was a couple months ago, their inflows are actually still pretty consistent in terms of the money that is being invested in those funds. And so what that shows is that their communication strategy with the investors in their funds is working. And this is part of that communication strategy. And so take that for what it is. If you think they're being misleading or just open or whatever, the facts are the facts. And I don't have a strong opinion on, I tend to think they're not intentionally just blatantly lying and misleading people, but they're just smart and they're trying to take care of their business and their funds as well. That's kind of it's a business. That's where I land on that. Here are the simulation outputs, the expected value. So this is kind of their base case, has it at 4,600 in 2026. The bear case has it at 2,900 and the bull case is 5,800. Let's talk about what actually happened in 2021 compared to what they are projecting could happen in the bear case and the bull case outcomes. And then I'll share a little bit on my thoughts and a little bit of the research that I've done to back up my thoughts. And I'm not an expert in Tesla by any means. Cars sold under 1 million were sold in 2021. Their bear case has 10 million cars sold in 2026. And the bull case has 17 million cars sold in 2026. Average selling price is actually around 50K in 2021. In both of these scenarios, they have that coming down, which I think is good to have that built in, because in order to get to anywhere, near 10 million or 17 million, they likely have to bring that price down to appeal to more people's budgets. Electric vehicle revenue in billions. So this is just estimating out the revenue, what that would be. This past year was 46 billion. In the bear case, they're estimating 372 billion. And in the bull case, they're estimating 500. They have two categories here, which are kind of interesting to me, and we'll jump into details of my thoughts on this. They have the human-driven ride-hail revenue and the autonomous ride-hailing revenue. They had $0 from that in 2021 or in the history of the company. In the bear case, they have 67 billion and 51 billion for those two categories. So that's about 119 billion. In the bull case, they have 486 billion in revenue coming from two areas that they have zero revenue from in the company's history. Then they get into gross margins and total gross margin and total EBITDA margin. Without going too much into detail about all of these percentages, there's a couple key ones we need to pay attention to based off how they're valuing the company in 2026. The first is EBITDA margin. So in 2021, they had a 21.6% EBITDA margin. The bear case assumes 37%, and the bull case assumes 35%. The reason that this is increasing is efficiencies in production of their vehicles, but Ark believes that the revenue from those additional segments, the human driven ride hailing, the autonomous ride hailing, is going to be higher gross margin or higher EBITDA margin revenue than the automobile manufacturing, which is important when we think about how that EBITDA margin can increase over time and how much it can increase over time. They noted actually down here the similarity in bear and bull example EBITDA margins and gross margin reflects our view of the most plausible economics of the two scenarios. Tesla's human-driven ride-hail and autonomous business lines, which carry higher EBIT margins, make up 30% of EBITDA in the bear case. In the bear case, Tesla doesn't scale as aggressively and can remain at a higher price point for longer, which benefits its margin structure. In the bull case, the gross margins and EBITDA margin on Tesla's electric vehicle business decline as it sells into lower priced car segments, offset by the ride hailing business lines, which make up a larger percentage of profits. So that explains a little bit of the difference and why the EBITDA margin is higher in the bear case scenario, at least in Ark and Kathy Wood's opinion, than in the bull case scenario. Then we get to their EBITDA multiple, or the enterprise value to EBITDA. Right now it's at 86. They have it coming all the way down to 14.5, which is, it's really good to do that because we can't assume it's going to trade, at 86 forever. And so by doing that, you add a little bit of potential of margin of safety into these price targets, but there's a place where there may not be a little margin of safety, which is, we'll get into that in a second. And then 17 for the bull case scenario. And so that brings us to a bear case scenario, according to Ark, of a $2,900 share price, which is a 24% compound annual growth rate from here. The market on average grows 8 to 10% a year. So doubling or tripling the average return of the market is what they believe the bear case scenario for Tesla is. And then in the bull case scenario, a 42% CAGR, which is, 5x the average for the market or more, 6x, something like that. Pretty bullish to say the least. And so let's jump in a little bit into why I'm questioning the bear case scenario. Earlier today, I created a tweet thread, which you can find me on Twitter at LiebermanAustin, that just had some questions for the Ark team, which I have a lot of respect for, and hopefully they respond sometime between now and next week, and I'll make another video if they do. But I shared, what I think the case could be. The bear case assumes 10 million cars sold and 118 billion in revenue from human-driven ride hail and autonomous ride hail. In 21, there were 0.9 million cars sold and $0 in revenue from those segments. So immediately, a bear case should assume, in my opinion, $0 in revenue from unproven segments, and that brings the EBITDA 30% lower from the price target that they gave us if we leave the car sales at 10 million. So just that alone, just removing the unproven revenue, brings the price target down from 2,900 down 30%, because that's 30% of the EBITDA, to $2,030 a share, which is still 100% upside from here if we kept the cars at 10 million. Vehicle sales of 10 million in 2026 is the bear case, which is up from 0.9 in 2021. According to Statista, there was 73 million sold in 2021, with Toyota having 10% market share. Looks like they estimate about 73 million sold in 2026. And the bear case assumes that Tesla owns 13.6 of that market share. So that means Ark's assumption has to either be that vehicle sales are far higher than 73 million in 2026, or that Tesla somehow jumps from under 2% market share to over 13%. Does every other automaker die in that scenario? How do they make that jump is my big question. I think that much market share is unlikely, so let's assume Statista is 27% too low. Here's those numbers. 2021, about 73 million. And we can see in 2026, it's pretty much at the same as 2021, which is where I got the 73 million estimated passenger vehicles sold in 2026. So if we assume that Statista is 27% too low and they sell 100, there's 100 million vehicles sold in 2026. And if Tesla has 5% of market share of 100 million vehicles, that's 5 million vehicles. 10% would be 10 million. So even a very generous 5% of 100 million, then Tesla gets to 5 million vehicles sold, not 10 million. So in my opinion, a more rational bear case scenario might be $0 in revenue from segments that don't currently exist and 5 million vehicles sold, which is still, basically 5xing the amount of vehicles that they've sold in 2021 over the next 5 years. If we bump the 2026 asking average selling price up to 40K from the models 38 that Ark used, then we get 200 billion in revenue from 5 million vehicles sold. Tesla's last 12 months of revenue was 54 billion, so that's almost 4xing their revenue over the next 5 years. That gets us to about $60 billion in EBITDA, which is far above what the analysts and consensus currently is, and up from 11 billion in 2021. And so in my opinion, a rational 2026 bear case price target would be 870, which is a 12% drop from here. There you have it. That's my opinion on Ark's updated price target of Tesla. At the very least, I think we've got to bring that bear case scenario price target down. I need to dig into that bull case scenario a little bit more, and I'm actively doing research on Tesla, and I'm strongly considering starting a position. I'd love to know in the comments if you own Tesla. If you want to see what I have been buying, check out the video right here.